Hi, I'm Rob Powell, and along with my business partners Chris and Gary, we are Cardinal Capital. Recently, the SBA came out with a new Standard Operating Procedures document. It's effective October 1st. We thought it was a good idea to give you a summary of what's inside this 590-page SOP. Truth be told, anything the SBA does is important to us because we handle quite a few SBA and government-backed loans. In fact, if we were a direct lender, we'd be ranked number 2 in our area in terms of SBA deals and dollar amount, which is not bad for 3 guys in a one-room office. This new SOP is intended to streamline and modernize the Certified Development Company Program, or the CDCs, and it includes some changes to the SBA 7A and 504 loan program. The new SOP is called the SBA SOP 5010-6 to replace the SBA SOP 5010-5K. Clearly, creativity and branding is not a core competency for the SBA. This new version has several format changes and some easier navigation. For example, it's broken out into 2 parts, named Part 1 and Part 2. Part 2 is further divided into 3 sections, named Section A, B, and C. Not very creative, but it is effective. Like most of you in business, we like things to be straightforward. So we immediately went to the summary page, where you expect the executive summary, where it states key pages affected in this version, all. So much for a summary. As a side note, if you were to line up every page of the SOP 5010-6 end to end, it would be as tall as the Eiffel Tower at the Paris Casino in Las Vegas. I digress. Here are the highlights. Part 1 is largely review and legal speak with a few additions. It references a whole list of previous SBA policy, procedural, and information notices we all receive periodically between the last SOP effective date and this one. That last SOP was a mere 427 pages, as opposed to this new and efficient 590-page version. Here's where you either need to get a pillow or a notepad or both. Of note, this new SOP includes revisions to the SBA Form 750, the Loan Guarantee Agreement or Deferred Participation, IRS Form 4506T, the Request for Transcript of Tax Return, and eliminates SBA Form 912, the Statement of Personal History, as it is used in connection with 7A SBA Form 1919, the Borrower Information Form. Now, the SOP also has a few format changes. Again, all designed to make it easier to navigate. At least the SBA realizes it's painful to weed through all of this for us mere mortals, and it's given us a few tools to help us find our way. The navigation features include bookmarks and built-in style headings and a navigation pane accessible by typing Control F and selecting headings. Again, easier to navigate for the rest of us. Formerly known as Subpart A is now called Part 1, which is basically the background, lender participation, and portfolio requirements, criteria for being an SBA lender, secondary market transactions, and securitizations. Part 2, which was formerly Subparts B and C, is divided into 3 sections creatively called Sections A, B, and C. A covers core requirements for all 7A loans and 504 loans. B covers 7A loan programs in more detail, and C covers 504 loan program specifics. Pretty straightforward so far, right? In Part 1, for those of you participating in the 7A and 504 loan programs, it states that in order for a lender to participate in the Preferred Lender Program, the PLP, the SBA's loyalty program, the lender must demonstrate that it has processed and disbursed at least 10 SBA loans within the last 24 months. What you have in the pipeline does not count. There's also contents of the application for credit unions to apply to participate as a 7A lender in this section as well. This section also contains guidance on the fingerprint background checks in connection with SBA Form 1081. They've also renamed the SBA offices to the catchy name of Lead District Office, or LDO for short. This serves the geographic area where the lender's primary office is located and serves as the liaison between the SBA and the CDC. You'd think they could come up with something a little more creative than Lead District Office. They've also added a brand new section on the eligibility of businesses in the hemp or CBD world. We're proposing they call this the Cheech and Chong Guidance.
I think we're parked, man.
Or the Spicoli edition.
All I need are some tasty waves, cool buzz, and I'm fine.
Or simply
I'm the dude.
The dude.
So that's what you call me, you know? That or his dudeness or duder or, El Duderino if you're not into the whole brevity thing.
We're still waiting to hear back from them on that piece. They also include in Part 2, Section A, clarification that the applicant's credit score is the sole reason that credit is not available elsewhere, and 51% of the applying business must be owned and controlled by a U.S. citizen, or those who have lawful permanent resident status. Also, you can't be excluded or on the SBA's naughty list, according to SAM. That's the System for Awards Management. They increased from $150,000 to $250,000 the threshold loan amounts to determine when environmental investigation needs to be initiated among those industries that are not identified as environmentally sensitive. One relevant and applicable clarification these days is the guidance related to prior loss to the government and delinquent federal debt. Specifically, the prior loss rule only applies to debt incurred by a business and not loans to individuals like student debt. We're going to see a lot of these issues in the near future. I'm not going to go into the details of the changes to the loan-specific requirements for 7A or 504. That would be in Part 2, Sections B and C, because frankly, if you're still awake at this point and haven't clicked off this video, I don't want to give you a reason to do so. And don't worry, we're almost done. So for those of you who speak government fluently, here's the synopsis.
Excuse me, sir. Seeing as how the VP is such a VIP, shouldn't we keep the PC on the QT? Because if it leaks to the VC, you can end up an MIA and then we'd all be put on KP.
We joke about this being a more efficient and streamlined guidance delivered in this rather lengthy SOP, but it is designed to make things easier on the lender and ultimately the borrower. They made threshold numbers more attainable and removed some of the annoying obstacles. They've also outlined more specifically where explanations and narratives are necessary and also identified NAICS code-specific industries where exceptions apply. All of this is a lot to take in, but if it's followed properly, it will help the loan processing and underwriting go easier and hopefully prevent, or at least reduce, the back and forth process that anyone in the lending business is all too familiar with. Ultimately, this will help the economy and give access to capital to more companies. This is a very good thing. As always, if you have any questions, please reach out to us at Cardinal Capital. We'll be happy to help you. If you like this, go ahead and hit the like button and subscribe so you'll catch the latest Cardinal Capital vlog. Thanks for stopping by, and we'll see you soon.